In this week's SoFi breakdown, we're watching analysts quietly double down on their calls, parsing a couple of fresh 8K filings and trying to decide if this latest sideways grind into earnings is a calm consolidation or just the market loading the slingshot. Welcome back to Fintech Spy, where we don't just trade the volatility. We zoom in on it, overanalyze it, draw 3 different fib levels, argue with ourselves about risk management, and then make fun of the whole thing. If you're new here, hit that subscribe button for more chaotic fintech breakdowns, terrible market analogies, and occasionally accurate memes. Let's hop right into SoFi. Quick reminder, I am not a financial advisor. This is not financial advice. If you're making real trades based on a parody segment, you probably shouldn't be trading. This show exists purely for entertainment, education, and the shared coping mechanism of watching candlesticks together while pretending we're emotionally stable. Kicking off our first new segment in these reviews, analyst updates. The big story this week is that there isn't really a story. No shiny new upgrades, no dramatic downgrades, just the usual suspects quietly re-airing their takes. We still have 2 active sell ratings hanging over SoFi from Bank of America and KBW, and both were effectively re-announced or reiterated. At this point, it's less breaking news and more like background noise, the same 2 people in the back of the room raising their hands to say, "We still don't like it," every time SoFi's name comes up. The average target price is sitting around $27.11, which is hilarious when price keeps wandering above and below that level like it's checking in and out of a motel. For me, that line turns into a mental sticky note. If we dip noticeably under that average target again, I'm absolutely thinking about scooping a small position for a short-term flip, not a marriage proposal. Analyst takeaway, nothing new on paper, but the gap between what the street is modeling and what the chart is doing is exactly where the entertainment and the trades live. This past week and weekend, SoFi dropped a few bits of actual company news, the boring but important stuff that doesn't always make it into the meme cycle. First, we had 2 new 8K filings. The filing from January 9th was about Steven Simcock retiring from his role as the company's general counsel. He's not fully disappearing, he's shifting into an advisor role for the next year, which is corporate speak for, "I'm leaving, but please still answer my emails." The earlier 8K from January 5th confirmed the completion of the big stock offering. The dilution saga we've been talking about is now officially in the done and priced bucket, not just a looming headline. Then we got a rare bit of Anthony Noto interaction on X. Someone asked about former President Trump's idea of capping credit card interest at 10% for a year, and Noto actually jumped into the conversation. Whether or not you like the proposal, SoFi's angle was basically, if there's going to be a conversation about reshaping credit, they'd like to be at the table, offering an on-ramp for people into more structured, digital credit products. Do I think you fix a credit problem purely with more credit? No. But seeing Noto wade into the discussion and actually respond to someone on X is at least a signal that SoFi wants to be seen as part of the policy and product conversation, not just a stock chart people argue about on social media. Chart reading time on the weekly chart. Even though we printed a red candle, it's sitting on a higher low, which is the market's subtle way of saying, I'm not happy, but I'm not giving up either. I'm not exactly thrilled with the look, but for a medium-term view, I can live with a little grind higher instead of a total rug pull. Price action still suggests we may chop sideways into earnings rather than launching into a clean trend. Meanwhile, the MACD and stock RSI are practically arguing with each other. One is hinting there's room for momentum to tick back up. The other is flashing, slow down, you're not that bullish. It's the kind of indicator conflict that makes you want popcorn more than it makes you want to double your position. On the daily chart, the last 2 sessions of the week actually had some upside, even if the sequence wasn't exactly what the bull script writers were hoping for. The important part is that we're still printing higher lows, which keeps the short-term structure pointed slightly up instead of rolling over. With the MACD getting ready to cross back toward positive territory, I'm leaning toward the idea that we've got more runway for green candles this week than we did last week. It doesn't guarantee a trend, but it does shift the vibe from "please stop" to "okay, maybe we're building something here." On the 4-hour chart, it's the zoomed-in echo of the daily story. Same trend, more roller coaster humps. Intraday, every little dip and pop is exaggerated, but the overall structure still leans bullish as long as those higher lows keep stacking. If I hadn't already been holding from the week prior, Friday morning would have looked very buyable on this time frame. Both the MACD and stock RSI are lining up in a way that suggests a potential push higher early this week, not a guaranteed moonshot, but enough signal that day traders and short-term swing traders are definitely paying attention. Looking at the January 16th options chain, there's a lot more activity than we've seen in recent weeks. The implied move is sitting around $1.90, which sounds tame on paper, but SoFi has a history of treating tame as a personal challenge. On the put side, there's a huge wall of open interest at $25, around 57,000 contracts, with another 19.5 thousand around 26 and 31,000 at 27. That's a whole crowd of traders either hedging the floor or trying to will a floor into existence with raw contract volume. On the call side, we've got a similar cluster of dreamers, about 48,000 contracts at $30, roughly 16.9 thousand at 29 and 19,000 at 28. That's your standard one good week, and we're back near 30 crowd, putting real premium behind their optimism. Put it together and you get a chain absolutely stuffed with premium on both sides. For market makers, this is a buffet. For traders, it's a reminder that somebody is walking away happy after Friday, and somebody else is writing donated to the options gods in their journal. For SoFi traders, this week feels like a quiet reset with hidden tension. Analysts didn't really change their tune, but the filings, the chart, and the options chain all hint that the next real move is being built now, not later. The weekly is grinding higher off a red candle. The daily and 4-hour are both stacking higher lows, and the January 16th chain is absolutely loaded with bets on both sides. Big picture, SoFi doesn't look like it's imploding, it looks like it's coiling. Whether that coil snaps upward into a rally or downward into another round of why do I own this depends on how we trade into earnings, how that $27 area behaves, and whether all that options premium decides to pay the calls or the puts. If you agree, disagree, or think SoFi is just winding up for the next meme-fueled comeback, drop a comment and we'll spy on it next time. If you think this whole chart looks like emotional damage drawn in candlestick form, tell us your coping strategy below: coffee, memes, or pretending you're a long-term investor now. And if there's another ticker you want roasted on this channel, throw it down below and we'll put it under the Fintech spy microscope. No guarantees on price targets, but we will provide world-class over analysis and high-quality sarcasm.